Hello, it's Robert Miner with Dynamic Traders Group with today's DT Trade Strategies video for some setups next week, the week beginning August 3rd, where we give you some brief analysis and some potential setups for the upcoming week for our Twitter, YouTube, and other followers that are not currently subscribers to our report. If you like what you learn here, check out our DT reports where you can get a trial for just $19 for the first month. And you'll get updates every day, videos, 2-3 videos every week. Just a lot of information, and we focus on education within our reports as well to teach you how to make high probability trading decisions. Okay, let's take a look at a couple of markets. So let's take a look at the euro. It's one of my favorite markets to trade. It really hits some of those time and price targets very nicely in all time frames, as well as has some nice clean patterns much of the time. So this is Euro Weekly. We're going to start with weekly, and then we'll get down to intraday for a specific trade strategy. And then I'm going to broaden up and go back into some monthly data looking at the past several years, so maybe we can get a little bigger picture about where we are with the euro as well as the dollar index, of course, in the months and maybe even years ahead. So here's Euro Weekly. For those of you familiar with Elliott Wave, anybody that's familiar with Elliott Wave is going to look at this chart and say this is an almost textbook 5-wave advance into last week. So from the March low, of course, we had an initial advance, then we had this A, B, C, D, E correction. This was obvious correction pattern. And when the correction is complete, what should happen? Well, resumption of the trend to a new extreme, which is exactly what happened. This is the wave 3 advance, went well above the wave 1 high. We had another pretty simple ABC correction into the July low. And then when the correction was complete, what should happen? Again, a resumption of the trend to a new extreme, which is exactly what happened. Now, the euro blew through the typical end of wave 5 price targets. Many years ago, I formulated particular relationships with the internal structure and the internal waves of Elliott Wave to identify the high probability end of wave target zones if you have a clearly defined pattern structure. And it's most useful, those end of wave targets, for the final wave within a structure, whether it's a 5-wave or an ABC correction or even ABCDE, whatever. So, okay, we went right through this 2 weeks ago, exceeded the typical end of wave 5 targets. So we could then take a look at, well, what should be the maximum if, again, notice my language, if we have completed waves 1, 2, 3, 4, what is typically the maximum for an end of wave 5? Well, that's typically 100% of the net range of waves 1 through 3. So we measure 100% of the net range of 1 through 3, and we use in Dynamic Trader the alternate price projection tool, where we measure from that low to the high of wave 3, and then we project that from the wave 4 low. And there's the 100% alternate price projection. See, I already had it on the chart there. And that was at one spot, 19,549. Well, that should be the, keep in mind, again, the maximum upside before we completed the wave 5. So it's not a precise target, it's just a maximum target. Of course, last week, we came pretty close to that, and then we sold off fairly sharply at the end of the week, closing in midweek for the first time since we took off on this wave 5. First time we really closed midweek once we broke above this high. So that alone doesn't indicate the wave 5 is complete, but it tells us that we're in a position to have completed the wave 5. So there's two other factors that we look at. One is the weekly momentum using our DT oscillator. The dual look back just completed week 2 of being dual look back overbought. So that warns us we're very close. We're within a 1 or 2 bars of completing a wave 5. So that's fairly significant. Now, what's more significant is timing, and we had identified some time factors. Just a simple one I've got up here, just going highs to highs for this 5-wave advance. We were 7 weeks and then 6 weeks. And if we keep that time rhythm going, by week 7, we should probably complete the next weekly high in the wave 5 high. And last week was week 7. So when we're looking at this data, we say we're in a position, a very strong position, to have completed not just a weekly high, but a 5-week advance coming up from this low. Now, last week, for these brief videos, as I took a look at silver, and silver was in, basically it looked the same. 5 waves up into last week, and so we were nearing the extremes in silver, as well as gold and the GDX as well. They look a lot like the euro does. So whatever I'm talking about the euro here, you can kind of use that information for the metals as well. So let's take a look at the daily data. Here's the FX daily data. What we're looking at and what I had in our reports this past week is the initial signal that should indicate the wave 5 is complete and that weekly high is complete is if we make a two-close reversal. Two-close reversal is when we have a reversal day, but we close below the closes of the past 2 days. A reversal day is we just make a close below, in this case below, the close of the prior day, but we want a two-close reversal. And this past week, we continued up and up and up. Our daily momentum's actually made a bear reversal on Wednesday, dual look-back bear reversal. Again, warning that we're near that top, which should be made this past week. And but we needed that reversal signal. Well, Friday, we got that signal. On Friday, we made a two-close bear reversal. It's more than likely we have just completed the 5-wave advance and the bull trend up from the March low. Now, once we have a reversal signal, we then identify, well, what can confirm that reversal is a good reversal, and we can go ahead and take a specific trade action on it. That's called the follow-through or the confirmation. And in this case, just to keep it simple, is just a close below the July 28th close at 1.1720 would confirm this reversal, and the continuation of the bear trend confirms the wave 5 high. So that's very significant of what happened on Friday in the euro. And again, we're not taking trading action yet. We're waiting for a confirmation follow through to this reversal signal, but it's very significant because we've more than likely, when we get that confirmation, we've completed the entire trend up from the March low. Now, does that mean we're going to then reverse into a bear trend and continue on to new lows? Well, probably not. More than likely, we're going to have a corrective decline followed eventually by the resumption of the bull trend to new extremes. Let me go back to the weekly, and let's just assume last week completed that high. So a couple of key things that we're going to be looking for in the weeks ahead, and right now that's assuming we've completed that weekly high, is that we should be making a corrective decline, not a bear trend. So if we're making a corrective decline to a 5-wave advance, is we usually make a retracement at about 50%, about a 50% retracement. So a 50% retracement is right here in the midst of where, or the middle of where this wave 4 was. And in Elliott wave terms, we look at when we're making a correction to 5-wave advance, we look at a typical retracement or correction reaches around the extreme of the wave 4. So this retracement, or the 50% retracement, is right in the middle of the wave 4 trading range. So it's a really good target just to be aware of if the market, the euro does continue to decline, or if we do make this reversal and it declines over the next few weeks. And if it gets anywhere near the 50% retracement, we'll know that's fairly significant, not just because it's a 50% retracement, because it's also right in the middle of this range of wave 4. So just keep that in mind in the weeks ahead. Again, if we do tend to go sideways to down in the weeks ahead as anticipated. So here's another time factor we'll look at. It's a pretty simple one. It's just looking at the low to low to low. The week ending August 28th, so that's 3 weeks from now. And that would be a typical retracement of about 3 weeks. So we'd be looking for a potential for a weekly low during that week. Now, there's a lot of other time factors we'll be looking at as we approach that time, but it's just something to take a look at, that if we've completed a wave 5, more than likely we're going to be sideways to down for at least 3 weeks into the week ending August 28th. That'd kind of be our minimum, and more than likely would eventually reach about the 50% retracement. Let's take a quick look at the long term of the euro. And let me get this data organized. There we go. We won't go into details about all of this decline from the 2008 high. It was a beautiful Elliott wave pattern coming down. Everything fits in almost perfectly. But what we're going to look at is off of this January 2017 low. We had a clean, obvious 5-wave advance. So that should be what we call wave 1 or a wave A advance. And we won't go into how it fits into the prior decline, but it was at least a wave A. That would indicate that following the top of the 5-wave advance should be a correction, and then following that correction again should be another advance that would test or exceed the wave A high to complete a minimum 3-section correction. Similar, I'll just go back, we'll look at this real quick. Here's what we call an irregular ABC, where the wave C came up close to the extreme of wave A. We go back off the March 2015 low, a flat ABC, where wave C came up to around the extreme of wave A. So again, we should reach at least near the 2018 February high. So we should have quite a ways to go, or a fair amount to go on the upside before we've completed this advance off the February low. So that's a significant piece of information to have. That means the 5-wave advance, that what looks like a 5-wave advance on this weekly data into last week's high, is not the completion of a bull trend. It's the first section up. We should have a correction to that, followed by a resumption of the bull trend, which should eventually at least come close to this February 2018 high, if not exceed it. So more typically, on an ABC 3-section correction, we call it a zigzag, and the wave C exceeds the extreme of wave A. But at a minimum, we should have a fair ways to go and many months to go before we complete this euro bull market that began in February of this year. Of course, the dollar is in just the opposite position. So let's take a quick look at the dollar. Here's the weekly, and more than likely, we just completed a weekly low in the dollar. We need the same kind of confirmation that it's talking about in the euro, but just keep in mind, this is near the extreme. This is the 100% alternate price projection of the wave 1 and the waves 3, and we just tagged the support channel line that was drawn from the parallel channel from the wave 2 and 4 extreme from the wave 3. That's a real typical Elliott wave kind of target based on chart geometry that we have. And here's the dollar monthly. And again, while the dollar is probably in a position it is in a position to have completed a 5-wave decline. That should be a temporary low followed by a few weeks of correction, and then a continuation of the bear trend to test or exceed the February 2018 low. So again, this should be, more than likely, it's going to be a temporary low that we make in the dollar in the days ahead, and more than likely, we already made it last week. Well, that's it for today. This is a little longer than normal. I went into a little more detail with the euro and the dollar because they're so influential in other markets, and looking at not only just some immediate trade strategies. You should be looking immediately early next week for that reversal confirmation signal in the euro, because that's going to be a great setup on the short side of the euro, long side of the dollar when it's made over the next several weeks. But eventually, after the euro makes a corrective decline, it should continue the bull trend to a fairly significant amount of time in price, and the dollar just the opposite. After it makes a several-week corrective rally, it should eventually continue to decline. And then take a look at a comparison with the euro and your precious metal charts, because they've been trading pretty much together, generally in the reversals have been made around the same time, and the trends tend to trend together. So that gives you a little hint of what to expect with the precious metals maybe in the weeks ahead also. Okay, that's it for today. Check out our DT reports if you like what you learn here. We update these markets every day. Robert Miner, over and out.